Hello and welcome to Deal Makers. Now, the most awaited budget is announced. Experts, industrialists, investors have by now digested even the minutest details of the fine print of the budget. But now it's time for some action and some reality check on whether or not Arun Jaitley has lived up to the expectations. When will investment revive and will FY16 be a better year for Deal Street are the big questions. Now, we have a panel of experts today who are in the thick of the action and will give us some of those answers. Joining me are Zia Mody of AZB, Neeraj Bharadwaj of Carlyle and Mahindra Group's VS Parthasarathy. Ladies and gentlemen, so good to have you on the show. Now let's start with foreign investor sentiment post the budget. India needs top dollar to flow in, but the image of an adversarial tax regime has been a big hindrance. Zia Mody, coming to you first. Have we put an end to tax terrorism in the country, or is there a lot to be done?
I think the very clear message the government is giving out, not just in the budget, but even in the months ahead, is that they have recognized the damage done by the Vodafone case, and that they want to be clear that retroactive tax amendments and behavior will now be severely curtailed. One, it will basically go to the high-powered committee, where I guess that the rarest of rare cases would actually be allowed to continue. The noise bites are such that the FM is giving you a path forward as to where he's going to take the tax regime. Simpler slabs, no GAR, bringing in hopefully provisions that will curtail the very, very prolific transfer pricing litigation. So I think in terms of retroactive tax, that I feel that the foreign investors will feel much more comfortable about. In terms of tax terrorism generally, which is just not about retrospective tax, I think I'm not sure that has yet gone away. And I think there is a conflict between the finance ministry actually setting goals and targets for the revenue department and the officers, and then the assessee, not always, but often also being harassed to deliver up, pay under protest in order to meet those targets, simply because then the officer can then move on to another post, he's met his targets. So I think realistic tax expectations, an honest assessment of what should come into the kitty without these target-driven KRAs would actually be very useful to soothe domestic India Inc. confidence.
Now, we do have a foreign investor right here with us, Neeraj Bharadwaj. Does the budget address most of your worries?
You know, I think it's a wait and see. I think the steps they've taken, especially around GAR, are very positively viewed by the foreign investor community. But I think there's also a sense that the budget is more a policy statement. And I think investors are looking for the implementation of how these policies get executed. So I think, as I said, GAR is positive. Some of the other steps with regard to indirect transfer tax, with regard to MAT, positive statements have been made, but the implementation is what foreign investors are looking for.
So, Neeraj, what about the double taxation issue around alternative investment fund? Is that resolved now?
You know, I think it's been largely resolved. So just to put it in context, as you know, Nisha, there was the pass-through was only applicable so far for Category 1 funds. And now they've increased that ambit to include Category 2 funds as well. So there'll no longer be double taxation, both in the hands of the fund and the recipient. I think the two issues which still remain to be addressed, one is how will business income get treated, and secondly, to the extent a fund has a offshore investor, the way the budget read was that there'll have to be a 10% TDS collected by the fund, and so that offshore investor who could be in a tax neutral territory will have to apply for a rebate. So these are some of the operational issues which I think one has to look at in detail, but to a large degree I think the big pain point about certain funds being excluded from pass-through has been resolved.
Now shifting to the Indian investors, which have to come in from the large business houses, and VS Parthasarathy heads one. Now, tell me, does a hope of a reduction in corporate tax from FY17 cheer the corporate world? I ask you because FY16 does not have any reduction, but other surcharges, etc., may really increase your tax outgo for now.
A very, very interesting question, in the sense what you are asking me, that FY16, which is next year, there is not going to be a reduction in tax. If anything, because of surcharge and service tax, the overall corporate tax is going to go up roughly 0.7 or so percent. So it's going to be, instead of marginal rate 33.99, it's going to be 34.6 or 34.7. So that being the case, after that, over a 4-year period, it's going to go from 30% to 25%. But what the finance minister has also said, that while the headline corporate tax has come down, he is going to take away some of the exemptions. I'm still waiting to see what are the exemptions which are being taken away, so that we can compare the headline reduction with what is being taken away and therefore see the net impact. Without the detail, today I can say directionally it is positive, and therefore any new person who is coming into manufacture will know that the tax regime, there is a certain direction set out. So in a sense, what we can say for existing industry, in the short term there is pain, with the hope that there will be gain in the long term.
All right, pain now, gain later. But tell us, VS Parthasarathy, with the exemptions gone, net, you may land up paying more tax this year.
And I think that's why I cautioned about it and said that I need to get hold of all that before I can comment. But assuming that the headline reduction is more than the exemption reduction, it's in the right direction. If not, then the effective rate of tax going up will take away that much more from investing in the company for future growth.
Zia Mody, another burning issue. What about transfer pricing case? Now, clarity on that for sure. What's your opinion on this?
No, I think more than the transfer provisions, transfer pricing provisions, what I think the government is saying, and I think it is a valid statement, is that if the primary wealth of that offshore entity is sitting in India, the site is in India, the substratum therefore of the transaction is India driven, then now the government is saying very squarely, taking the help of a High Court judgment which supports it, to say that, look, if more than 51% is sitting here, guess what? We want a slice of the tax. Again, personally speaking, I have no problem with that, provided it's put on the table. The seller community is aware of the tax it has to pay. It factors that into the pricing and into the deal. There's certainty all around. So not 5 years later are you slapped with some notice to say that, by the way, we think that this should have been recoverable. As long as the rules of the game are clear, the international community has to figure out what price it has to pay to come to India. It's making money anyway. That's why it's paying capital gains.
Right. The stock markets have been euphoric about the clubbing of FII and FDI. Now, this will probably spur more investments, Neeraj Bharadwaj.
I think it's helpful because, as you know, there are separate, today or this budget, there were separate limits for FII and FDI holdings in sectors such as banking, insurance, etc. And so by clubbing it under one level, investors who were setting up separate entities to invest will not have to do that anymore. I think if now there's a clear guideline on what this means from an exit standpoint as well, whether you can actually club these holdings which people have had separately, even from an exit perspective, I think that would really be helpful for foreign investors. I think the mere cosmetic change is helpful, but I don't think it'll really galvanize foreign investment.
All right, galvanize foreign investments and more are expected. But Zia Mody, tell me, what is the reaction that you are getting from your foreign clients? Are they now pretty convinced about the India growth story, or are there more grey areas to be addressed?
Well, I think people always object to paying more tax, so I'm not sure they're that comfortable, but at least they're clear. I think the budget has been positively received. I think that the foreign investor community that I've interacted with at least feels that they know that the rules of the game are going to be laid out. In fact, the FM himself said in his speech that I don't want to introduce some changes immediately. I want people to get breathing time to see how it will play out. I don't want to just bring surprises overnight. And I think that is the call which has given a lot of comfort. Also, regardless of the unnecessary allegation that it's a pro-business budget or not a pro-business budget, which I think is really not that relevant. What are the outcomes is what one has to look at. The tonality of the budget was friendly. It basically talked about government wanting to be in an honest partnership with business. It acknowledged to a large extent that government could not walk the path alone and private industry could not walk the path alone. And therefore, I thought that the hand that was held out in many areas by the FM was particularly comforting. Even the foreigners, when they hear that certain sectors are going to continue to get liberalized, foreign direct investment is going to be treated now on par with FII. So the headroom, if you like, for strategics goes up because you put it all in one bucket. That again is a heartening story.
All right, so that's the view coming in from the foreign investors. But what about the Indian investors and the business houses? Was Make in India only a lip service and nothing came out in the budget clearly, except probably the stray instance of import duty hike on commercial vehicles? And defense is one area that Mahindra Group is specially focused on right now, V.S. Parthasarathy.
You know, we are looking at all these sectors very keenly at all points of time. All of we have 18 industries and 10 business sector, and obviously we are looking at each one of them with great amount of hope and looking forward to the future. So basically what happens is all these aspects, whether it is defense, whether it is infrastructure, whether it's agri, all of them over a period of time, if what is being promised is to get implemented, and then RBI then comes out with the follow-on action based on this physical consolidation to do something on the interest portion, I think all of them should make an atmosphere conducive for more Make in India.
When we talk about the business environment being conducive, well, dispute resolution mechanism, that is one key area to be addressed by the government as well. Now, Zia Mody, has this particular area been addressed? What all needs to be done? Because this has in the past caused a lot of heartburn between the government and the companies.
I think the FM has said that he wants to introduce a commercial courts bill. Very welcome move. I think the earlier bill was really not practical. I think the new one will probably have more realistic clauses there. There was a commitment to physical infra and judicial appointments that I think is continuing with this government. So I think the commercial courts bill will still take another 4 to 5 years to play out, but that's better than not starting. And the last bucket is, of course, the dispute resolution under the arbitration bill, the act. There is an ordinance out there which I think the government has thought fit not to move right now. And I think that the amendment to the current act, if the ordinance does come through in the form of legislation, will go a long way in improving, at least in the arbitration space, the time and the manner in which arbitration awards can be enforced. I personally believe that we as a nation have unnecessarily exported our arbitration dispute resolution to countries like Singapore and London. It is simply because the foreign investor does not have faith in our ability to produce good, quick, reasoned awards and in getting the courts to enforce them without being dragged into a huge weight. So if we get resolution on the BITs, if we get a good commercial courts act coming into place and we get the amendment to the arbitration, again, I don't think we should expect too much because it is not fair. But I think if those happen, then in the next 5 years, we should see a much better scenario.
All right, 5 years is a very long time, but at least there is hope that in 5 years we will have a better dispute resolution mechanism in the country. With that, I'll slip into a short break. But remember, there are lots of things to be discussed, especially which sectors are going to be more active compared to the others in the coming days and months. And also, what is the view on investment revival and Deal Street going forward? Our special panel will be joining us right after this short break. Stay tuned to Dealmakers. Welcome back. You're watching Dealmakers. Now, which are the sectors and the themes which are emerging after the budget and could be looked at for financial year 2016? Now, let's find out from Carlyle then. Neeraj, what are the sectors you're looking at now for investments? And I also ask you this because private equity has been placing only safe bets. Will the capital intensive sectors now get any private equity money?
I think if you step back, if you look at the revised GDP growth rate numbers and even what is being projected, if you look at sort of 6.9%, 7.4% this year, and then projected 8.1 to 8.5% next year, in that environment, you will find tremendous, exciting private equity opportunities. If you go back to the heydays when India was actually growing at 8 to 9%, private equity was a very vibrant category. I think within that, if you start looking at sectors, obviously consumption-driven sectors will continue to dominate just given India's GDP mix. But also to your point, I think given the focus on Make in India, given the focus on defense, given the focus on building out infrastructure, especially in an environment where the government is actually promising plug-and-play projects, I think that those could be very interesting investment opportunities, because what one can't deal with as a private equity investor as any capital coming in is where your capital is not being put to productive use. And so to the extent these delays are taken out of the equation from an execution time frame, I think then sectors which previously were off limits come into the ambit of what private equity would look at.
Zia Mody, do you think that budget has propelled action into any particular sector?
I don't think the budget made any great announcements on the change of sectoral caps or FDI. But don't forget, leading up to that, you've got railways now opened up. You've got the list of items for defense completely narrowed. Only core defense is considered as defense, and that had been done by DIPP a while ago. You look at basically medical devices that have come out of the brownfield issue space with the FIPB. And you generally have really where you are perhaps stuck and you want this government to do more is in the e-commerce B2C space. That is, I think, been a political platform for them. I think they will probably have to wait a while to rethink or to see how to deal with the reality on the ground, which is that there's a lot of money waiting to come into India for the B2C platform.
And a quick poll then from our panelists. First, coming to Mahindra Group. What is your timeline for investment revival, and will you think Deal Street pick up in FY16? Will it be better than FY15?
Okay, so let me go first. As far as FY earnings is concerned, I think there is rural market is subdued and will need some time to revive. And the tractor market, especially as we could see, is going through a trough which will take a couple of quarters to come along. So like I said, next couple of quarters I look with caution, and thereafter look at things from an industry perspective with hope. And by then I suppose investment as well as RBI actions will start to kick in. So that's on that front. And if you asked about FY16 deal versus FY15, as more money flows in and more projects are actually awarded and starts implementing, I clearly see FY16 could be from a deal perspective. And as the growth starts to increase, the GDP growth has been projected, there'll be more deal flows than was in F15.
And what is Carlyle's view when it comes to the investment revival and a pickup in the Deal Street?
I see investment revival at being about 12 to 18 months away. And the reason I believe that is, I think fiscal deficit is actually going to inch up to the higher side. We've already talked, in the budget they talked about fiscal deficit being 30 bips higher. I think the 8.1 to 8.5% growth forecast based on which the budget is based is aggressive. So I think fiscal deficit will overshoot a bit, and therefore rate cuts will get delayed, and therefore the investment revival will get pushed out a bit. And I think secondly, I think the ease of doing business, which is really a key criteria for foreign investors coming to India, will take some time to get implemented. So for those reasons, I believe that the investment revival is 12 to 18 months away. And on FY16, the reason I joined private equity was I was never a good forecaster of short-term results, and therefore I would always take a 5-year view on what I say.
And Zia Mody, when are you expecting the deal flow to start and deal activity to really pick up? And do you see a elongated time in which the investment revival will happen in India?
I think that 2016 will have much better deal flow. I think infrastructure will still be a challenge in 16. I'm not sure it will address itself by then. But private equity continues to be excited about India. And strategics will definitely refocus on putting more money into manufacturing, buy into the consumer story, look at this as a government which has certainty about the way forward, right or wrong, yes or no. So I'm happy and I'm hopeful.
But one more important point to note, Zia Mody, is the put-call options and government being more flexible about this. How is the industry, the foreign investors, really viewing this particular bit? Is it giving them much more comfort about India?
I think it is important. I think what the RBI is saying now is that we will allow you your put calls based on internationally acceptable principles, and therefore there is that flexibility where otherwise there was none. So I think the foreign investors may feel held less hostage, if you like, to a regulatory environment than before. But again, unfortunately, if the Indian party is minded to fight, there will be a fight.
Now, Mr. Parthasarathy, do you agree that the government has done its bit after the budget and now the onus shifts to the RBI? Of course, one step has already been taken in a surprise rate cut of 25 basis points. Now more needs to be done, isn't it?
I think simply put, very important. The budget in a sense is little short on expectations because they had to do the Fiscal Consolidation Act. So the finance minister has very clearly demonstrated that fiscal deficit, focus on expenditure, everything is very important. So simply put, now the focus is turned on to RBI, and the 75 to 100 basis points reduction over a period of time will be an important facet as we look at revival going forward.
All right, and final word from Carlyle then. Neeraj, Bharadwaj, how much of the deal flow will be contributed by Carlyle? How active will you be in this year?
You know, it's hard to pinpoint that in terms of the number of deals which will happen. I think if one steps back, I think India now is as positive a destination for private equity within Carlyle as it ever has been before. So as you know, Nisha, our business is all about finding the micro opportunities. It's about finding the right company with a great promoter and great management team. So we'll continue to strive for that. And I believe with the budget, which is directionally correct, and if the implementation is successful, there's no reason why India will be a very significant source of destination for private equity from Carlyle.
All right. On that positive note, then, it's the end of this special discussion. Thank you so much, ladies and gentlemen, for joining us with a very valuable perspective on whether or not India is going to see an investment revival and how soon, and will the deal street will be up and kicking. And with that, we wrap it here. But remember, policy and intent is one thing, implementation another. On the former, the government has probably got full marks, but now it's the time to act. RBI's rate cut can be called the icing on the cake after a positive budget, but our experts opine that the next 12 months are going to be extremely crucial. But the good news is that everyone is hopeful of Achhe Din to come. Thank you so much for joining us.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.